You guys can see my charts probably. It's perfect. So in terms of SPY, yeah, take a look at it. Take a look at it, right? We pull back, but buy the dip continues. That's the major theme that is still ongoing. So we need to be wary of that. And then looking at Wix, if you look at it, so certainly people are buying protection. Wix is typically something known as a protection hedge. So when we see this making higher highs, not to necessarily say that it's necessarily going to be a reversal, but institutions and funds are hedging because they are all long as well. Another statistic I want to bring up, so last for 2 weeks running average, hedge funds were, institutions were the biggest net sellers, and then retail continues buying. So retail being about like 40-50% of the market right now as well. That is good. I have some charts as well besides Amazon. So the other one that I would look at personally would be Google. The reason why I like this name at this point right now is because even though it is a tech name, it is giving entries on pullbacks as well. So whenever we see a pullback, we just saw this a few days ago when the SPY had a pullback, we always have a run up. So Google is showing decent amount of strength. Now, for every trade that I do take, I also use Confluence. So let's go in here in terms of Google. Let's do an option flow heat map, Google, and then looking at the look back days. So what happened was we had, I think, when was it that we dropped a little bit? I think it was 4 days ago, right? So looking back at the positioning from 4 days ago should give us a gauge on what happened with Google over the last 4 sessions when the market was pulling back. So one thing that I like to do, and I would recommend for you folks as well, with all the tools that we have provided you guys with the Trading Bulls AI, I would highly recommend to use Confluence, right? So technical is one thing, market sentiment is another thing. The third thing I would say is overall market sentiment. And then if you look at something like Google, for example, so looking at the last four days when the market was dropping, so you can see the highest call inflow was around the 250s and 255s. 65, the call outflows were 250 to 265. So people are buying some protection as well on the or selling calls for premiums. And the highest put outflow, I would say, would be 240s to 230s. So people are selling deep in the money puts. That is a very, very bullish sign as well. So this is one thing. Looking at it now, what I would also do is take a look at the heat map, because let's say we have a long bias on this. So let's take a look at the ask and above ask as well. So going back to the last 4 days here. Sorry, to expand my heat map chat. Google, look back period 4, and then let's just go trade side, ask and above ask. So that will be a quick gauge on what happened over the last 4 days, especially on the opening position side. So let's see. So this is a good process, I guess, just a template that you guys can follow as well. As we are technical traders, looking at the chart obviously comes first, but then confluencing that with options heat map. So for example, if you look at it, the heaviest concentrated strikes on the 250s and the 255s, they're pretty heavy across October 17th, even November 21st. So people, both of these strikes, you guys can go look at your option chains. These are monthly. So if you see this much heavy of a tilt, right, there is certainly something going on. And then if you look at the flip side and the call on the put side, we do have some protection for December 19th, end of the year. Typically, a lot of people are taking profits as well. And then also funds are selling out of their positions. So someone could be hedging against that. But if you look at the plus, even I would say 600K plus volume, it's heavily out the money. It's on the call side, right? So that definitely gives me a good gauge, something as well. Now, another thing that I would look at would be looking at the option, would be looking at the GEX as well. So I'm a huge fan of GEX because as you folks know, so what we can do over here looking back at the GEX, so December 2025 is when we saw the highest put volume. So let's take a look at that here. Anything, I should say, less than, in fact. So just go back. Perfect. So less than. So yeah, I want to see what the GEX would look like for Google in these days, and that would give another, I guess, like a confluence criteria, looking at, you know, where the highest gamma walls are. So if you take a look at Google right now, where we sit, the highest call volume is the 250 strike, right? And then above that, all the way to the 260. So as you can see, everything till December and before, most of the flow is lining up to show that there's a heavy positive GEX. So these, as TV had described in the last session, these heavy GEX areas act as magnets. And then so essentially when the price gets to this level, what happens, or the price is below this level, what happens is dealers who have sold the calls essentially to the people who have bought the calls, they have to be delta neutral. So when the price gets to here, the way they do it is sell the dips, sell the rips and then buy the dips, you know, essentially to attract the price towards these magnets. So having said that, what I would do now is, if I go back to, you know, my Google chart here, let's go quickly to our Google option chain as well. So take a look at that. So if we take a look at where Google sits right now, you know, this would be a good region for your target, right? So I'm going to be looking at the October 17th and then the November 21st expirations as well. With Google, as we can see, going back to our GAX, right? Where would we want to put a stop loss on our options position? So we have Google heat map right here. And then we also have the GEX. So anything below 242, that's the first negative one. I would say we start to flip heavy negative, right? So 242. So that means 3-2, and we're sitting at 245. So that's a good risk to reward trade in terms of my opinion, where we are sitting right now at 246, pretty much 250 to 246.50, and we have $4.50, whereas the stop loss will probably be around somewhere here, 243 region. So a good risk, good 1-to-1 ratio. But then also what I also do, especially in this market right now where the buy the dip momentum continues, you would have seen a lot of the traders with the core team members as well. What they do is we have multiple entries. So let's say we open a November 21st expiration. You know, our entries could be anywhere between 246 to 243. The lower we are, the better. And then as you can see in the last two sessions, even though the 243 was negative, we flipped right away from the positive, flipped right away, right? So let's go to the 15-minute chart. As you can see, 243, right? There's a reason why we are seeing these massive reversals happening at 243, because if you think about what a negative looks like on 240, on the GEX chart, that's more saying that people will essentially magnify the move away from it. So if it's above 243, then it's going to be buy the dips. And then if it's below 242, it's going to be sell the, it's going to be buy the dips and then sell the rips essentially. So that's what it would be. So I would highly recommend continue using confluences with all the tools you folks have.